California task force to study and develop reparation proposals for African Americans. Content warning. It contains discussions of racial discrimination, sexual assault, torture, lynching, and other forms of extreme violence. Contains unedited historical quotations and photographs of white supremacist hatred, torture, lynching, autopsy, and other forms of graphic violence.
IV drivers of the wealth gap today. Unequal homeownership. Homes are one of the most important wealth assets that households can possess. 343 people who own homes can use them to borrow money to pay for expenses or pay off high-interest debt in times of crisis. 344 homeowners are able to generate wealth through home equity, so long as their home increases or appreciates in value. Homeownership is also believed to be more beneficial than renting because owners build equity and obtain additional tax benefits. 345 homeowners may also face less housing instability than renters, partially because they tend to be more well-off in general, especially during a crisis, and may therefore be less likely to lose their housing. 346 housing affordability problems, where an occupant must pay more than 30% of gross income for housing costs, including utilities. 347, are more than twice as common among renters than homeowners. 348. As discussed in Chapter 5, housing segregation, and above, government discrimination made it difficult for African Americans to buy real estate, gain wealth through real estate, and transfer that wealth to successive generations. 349 widespread homeownership in the United States was created through government action. Starting with New Deal legislation. 350 The New Deal created relatively safe long-term mortgage markets and reduced down payment requirements for homeownership. This transformed the housing landscape, allowing many working-class households to move from the rental lifestyle to owning a home. 351 Yet, as described above and in Chapter 5, Housing Segregation, the path to homeownership has been riddled with entrenched racism. 352. Today, African Americans are in a worse position than white Americans to have homes as assets to aid them in a crisis. The racial homeownership gap was 19% in 1940, and grew to 28% in 2009. As of the second quarter of 2020, out of $30.8 trillion in real estate assets in the U.S., Black households held 5% and white households held 78%. 353 in 2019, 42.8% of African Americans owned homes versus 73.3% of white Americans, and are more likely to face affordability issues in securing capital to purchase and sustain housing at 30% of their gross income, including utilities. 354 in the same year. Researchers for the National Bureau of Economic Research also found that black mortgage borrowers were charged higher interest rates than white borrowers were and were denied mortgages that would have been approved for white applicants. 355. African Americans who own homes have a greater reliance on the house as a source of wealth than white households. 356 in 2014. Home equity accounted for 92% of African Americans' net worth. 357 There is a gap between the appreciation of a home owned by a white family and the appreciation of a similar home owned by a black family. 358 When African Americans do own homes, they tend to be appraised for less than comparable white homes, limiting the amount of money that can be taken out of their home equity. Race affects the rate of return on home asset. 359 African American homeowners had a median home equity of $66. 800 in 2019. 360 white homeowners had a median home equity of $130,000 in the same year. 361. Nationally, in 2019, 42.8% of African Americans owned homes versus 73.3% of white Americans. Only 33% of Black Californians owned homes. Residential segregation contributes to the undervaluing of houses in black neighborhoods. 362 African American homeowners tend to own homes appraised for less in neighborhoods deemed less valuable. 363 which decreases their available equity relative to white homeowners. 364 even controlling for factors like neighborhood or home quality. A study has found systemic undervaluation of homes in black neighborhoods attributable to anti-black bias. 365 major companies offering real estate insurance have been accused of targeting inner-city neighborhoods where black families live by denying claims as fraudulent. 366 all of this limits African Americans' access to the benefits of home equity in a crisis. 367 African Americans also experience significant housing cost burdens. 368 without sufficient wealth in the first place, black households have limited means to invest in homeownership. 369 In 2019, 43% of black households spent more than 30% of their income on housing, compared with 25% of white households. 370 Discrimination in mortgage lending may also make it more difficult for black homeowners to access their home equity through cash-out refinancing. 371 A means of accessing home equity that has been increasingly popular during the pandemic. 372 Between April 2020 and January 2021, less than a quarter of black homeowners who could have saved $200 a month by refinancing did so, compared to 40% of similarly situated white homeowners. 373 But closing the homeownership gap alone will not close the racial wealth gap. The homeownership gap alone does not explain the racial wealth gap. 374 Among black and white American households who do not own a home, white households still have 31 times more wealth than African American households. 375 Fewer assets. Black households hold less assets than white households overall, but black households hold a higher proportion of assets in their cars and homes. And less in net liquid and net business assets. 376 Black households are also generally less likely to hold financial assets. 377 African Americans have substantially fewer assets than white people at every income level, including bank deposits, stocks, bonds, and loans. 378 African Americans tend to have fewer investments. Some studies argue that African American investment patterns generally show risk aversion and lack of education on stocks and investments. 379 They argue that wealthier African Americans tend to save more and invest less. 380 Compared to wealthier white Americans, and that white Americans are more likely than African Americans to invest in high-risk, high-reward assets. 381 For example, in 2004, African American families were less likely than white families to have investment accounts and retirement accounts. Only 44% of African Americans have retirement savings accounts, with a typical balance of around $20,000, compared to 65% of white Americans, who have an average balance of $50,000, according to the Federal Reserve. 382 And only 34% of African Americans own any stocks or mutual funds, compared to more than half of white people. 383 Some studies claim that this can be attributed to familial influence. Black families are less likely to have investment accounts if their parents didn't have any. 384 Other studies argue that African Americans are not significantly more risk-averse or less financially literate than white people with similar levels of income and wealth. Further, African Americans engage in entrepreneurship, which presents inherent risk, at higher rates than white Americans with similar levels of income and wealth. Low wealth, lack of financial inclusion. And financial constraints on choice often forces Black borrowers to use predatory and abusive alternative financial services rather than financial illiteracy. 385. African Americans have less liquid assets. Liquid assets accessible as cash in times of crisis include cash savings, checking accounts, savings accounts, money market funds, certificates of deposit, and government bonds. 386. Access to liquid assets is important in a crisis, as it enables people to continue to pay bills in the event of a sudden loss of income, or pay for emergency expenses such as medical costs. Lack of access to liquid assets can heighten the impact of crises by making it harder to afford basic necessities. 387. People may also turn to family for economic support in times of hardship. 388. In addition, access to government aid such as unemployment insurance, nutrition subsidies, and crisis-specific programs, such as stimulus checks and small business loans, help people and their businesses stay afloat. 389. These resources are vital for surviving economic crises. For example, liquid assets such as cash savings help people pay bills in the event of a job loss or weather emergency expenses like a medical emergency. 390. Similarly, people who have homes, stocks, or retirement funds may leverage their home value for a loan. 391. Liquidate stocks or borrow from or against their retirement accounts to pay for expenses during difficult economic times. 392. African American households tend to disproportionately lack access to many of these resources, often due to the persistence of historical disparities and racism that continues today. 393. In 2019, while 96.8% of African American families had some kind of liquid asset, such as a checking account, savings account, or prepaid card, typical African American families with liquid assets had $1,500 in liquid savings, compared to $8,100 for white families with liquid assets. 394. Racism in the banking system today still create barriers to liquid assets for Black customers. Black customers are sometimes profiled. 395. Viewed with suspicion just for entering a bank. 396. And questioned. 397. Over the most basic transactions. 398. African Americans have less non-liquid assets in general. Non-liquid assets such as homes, stocks, and retirement funds can support financial security by increasing resources necessary to weather a crisis or invest in wealth-generating assets for the future. 399. As discussed above, African Americans experience myriad barriers to homeownership and the mortgage market. Stocks and mutual funds, which can be sold, and retirement funds, which can be liquidated or borrowed against, also provide potential sources of aid in a crisis. 400. African Americans are also less likely to own stocks than white Americans, and African Americans who own stocks have less equity than white Americans do. 401. While 61% of white households own any form of stocks, only 33.5% of African American households do. 402. Among families who own stocks, the typical white family has access to $50,600 they could tap in an emergency, compared to $14,400 for the typical African American family. 403. While African Americans are more likely to have access to retirement accounts than homes or other types of stocks, they are still less likely than white Americans to have them. 404 Around 55% of African American working-age families have access to an employer-sponsored retirement plan, and 45% participate. 405 70% of white working-age families have access to an employer-sponsored retirement plan, and 60% of them participate. 406 Among working-age white families with balances in such accounts, the typical white family has approximately $50,000 saved, whereas the comparable African American family has approximately $20,000 saved. 407 During the pandemic, a survey found that African American households with retirement accounts were much more likely to report that they planned on withdrawing from or borrowing against them than white households due to relative lack of other assets. 408 However, withdrawing money from retirement accounts can incur tax and other penalties. 409 Lower business ownership. Business ownership allows African Americans to participate in local, regional, and global markets from which they have historically been excluded due to systemic racism and discrimination. 410 Equity in a business is among one of the types of assets that are more unequally distributed by race. 411 Lower wealth for African Americans leads to lower business ownership and self-employment. 412 studies have demonstrated the substantial wealth advantages to self-employment and have shown that those who become self-employed show much stronger gains in wealth compared to individuals who never become self-employed. 413 Black business owners typically start their businesses with half the capital of white business owners, despite the fact that they demonstrate a greater need for startup financing. The median loan amount for black business owners who are approved for credit is less than half of the loan amounts extended to their white counterparts. This is especially true for black business owners, given that the median net worth for black business owners is 12 times higher than black non-business owners. 414 Further, black business ownership is a viable path to creating wealth not only for black business owners, but also for black communities at large. 415 Most small businesses tend to hire from the community, which tends to create job opportunities for community residents. 416 Therefore, the success of black-owned businesses is a critical path for economic empowerment in black communities. 417 The Center for Financial Household Stability and the Federal Reserve Board of St. Louis have documented that, compared to white individuals, African Americans own fewer of their assets in the form of business assets. 418 In terms of market share, black-owned businesses are significantly underrepresented in comparison to white and other minority-owned businesses. 419 In 2017, only 35% of all United States businesses were black-owned compared to 81% white-owned. 420 Although black business ownership has been steadily increasing in the United States, growth has been tremendously slow. 421 Several factors contribute to the racial disparity in American business ownership, such as systemic barriers to securing startup capital and the relatively small size of black businesses. 422 African Americans face many systemic barriers when seeking the social and financial capital necessary to start their own businesses that make it increasingly difficult for black entrepreneurs to secure the financial capital necessary to launch or grow their own businesses. 423 As a result, black business owners typically start their businesses with half the capital of white business owners, despite the fact that they demonstrate a greater need for startup financing. 424 According to Pepperdine's Private Capital Access Index report, approximately 80% of black businesses sought financing for planned business growth or expansions, compared to only 55% of all respondents. 425 Although black businesses demonstrate a greater desire and need to secure financing, Due to discriminatory lending practices, black business owners receive lower loan amounts. And with less frequency than white business owners, 426 for example, the median loan amount for black business owners who are approved for credit is less than half of the loan amounts extended to their white counterparts, 427. Another barrier to the growth and development of black businesses is the fact that, on average, the businesses owned by African Americans are smaller than those owned by white Americans. 428. A key factor for measuring the size of a business is whether the business has employees, and statistics show that black-owned businesses are much less likely to have employees than white-owned businesses. 429. In 2012, for example, 23.9% of businesses owned by white men had employees, whereas only 6% of businesses owned by black men had employees. 430. Although the size of a business has a significant influence on the profitability of a business, even black-owned businesses with employees tend to be much less profitable than white-owned businesses with employees. 431. In 2014, 63.4% of white-owned businesses with employees indicated that they were profitable, compared to the reported profitability of only 45.6% of black-owned businesses with employees. 432. In addition, the top 100 black-owned businesses combined earned less than $30 billion. In 2014, Walmart earned $482 billion, or 16 times that. 433. The challenges faced by black business owners were further exacerbated by the economic hardships caused by the COVID-19 pandemic. 434. The Federal Reserve Bank of New York reports that about 58% of black-owned businesses were at risk of financial distress before the pandemic, compared to approximately 27% of white-owned businesses. 435. The financial instability experienced by black-owned businesses made these businesses particularly vulnerable at the onset of the pandemic. 436. According to a report by the House Committee on Small Business, black business ownership declined approximately 40%, more than any other racial group, during the first few months of the pandemic. 437. Black business owners such as Richard Anderson, the owner of Kinfolk Brass Band and Music Group, experienced significant economic distress as a result of the pandemic. 438. Before the pandemic, Kinfolk Brass Band was one of the most popular bands in New Orleans and frequently performed at weddings and music festivals around the world. 439. However, lockdown measures enacted to reduce the spread of COVID-19 forced all large events and gatherings to cease. 440. Without any events to perform at, Kinfolk Brass Band and its band members, including owner Richard Anderson, suffered a significant loss of income in 2020. 441. California. Black Californians are much more likely to be renters and much more likely to be housing cost burdened. For instance, 58.4% of black Californians are renters versus 34.1% for white Californians. 442. Black Californians less likely to have access to the credit and housing stability that owning a home can provide in a crisis. 443. Homeownership for black Californians lags behind the nationwide African American homeownership rate, -33.3% versus 44% nationally in 2019. 444. 63% of white Californians own their homes, while only 33% of black Californians do. 445. Homeownership rates for African American households have fallen every decade for the last 30 years, both unconditionally and after controlling for income and demographics. 446. Black Californians face higher priced loans, more predatory lending, and more risk. 447 During the housing crisis of the 2000s, California had the country's highest foreclosure rates, with Los Angeles leading the state. 448 African American household foreclosure rates were 19 times that of white Americans, likely due to increased targeting of minority communities for predatory lending as discussed above. 449 Black Californians have less non-liquid assets. African Americans in Los Angeles own fewer stocks, mutual funds, investment trusts, individual retirement account and/or private annuity than white Angelenos. 450 18% of U.S.-born Black households in Los Angeles do not have a car, the lowest of all reported ethnicities. 451 While Californians, in general, face long commute times, Black Californians in Los Angeles, on average, have a 7.5% longer commute. 452 In Los Angeles, 11.7% of white households own a business versus 3.1% of African American households. 453